Hey everybody, it's Mark Yegi, and I want to talk to you today about the 7 reasons people struggle with covered calls. And this can kind of apply to a lot of different kinds of investments, but I can just tell you that based on my experience with covered calls and hundreds of students, I think that there are some real basic things that need to be talked about. And let's first of all talk about covered calls. What are the benefits? Well, covered calls can give you reliable income. At least that's what I teach. And I show people how to get reliable income. Now, in a market like what's going on right now, where we have a red market and things are going down, you might feel that you're not making any money. And it may be true. Your account value may be going down. And I always tell my students, listen, you've got to ignore your account value and you've got to stick to the plan, because markets go up and markets go down. Look at this stock on your screen right here. It's Apple. Apple goes up, Apple goes down. This is a weekly chart since 2019. Look at it. 2019 was under $50. Now it's $250, okay, or $230, whatever it is. My point is, there are periods of time in the market where your stock is going to go down, where your markets are going to go down, where both are going to go down. And if you're always responding to the markets, you're probably making emotional decisions. So covered calls can be an excellent way to make money if you get beyond the typical what they tell you strategy, which is buy a stock and sell a call against it and you'll be fine. Well, it's not quite as simple as that. So I would say the first reason that people struggle with covered calls is they just don't understand them. They think it's as simple as buying that stock and selling a call. Well, I teach 4 cornerstones. It's the right stock in the right market at the right spot on the chart, and then we squeeze the juice. We collect the rent on the stock. But it starts with that whole concept of the cornerstones, at least for us. And then further, if you want to drill down, it's the right stock. Like, most people don't even know how to pick a stock, let alone how to sell calls against it. Is your stock in an uptrend? Is it in a downtrend? Is it going sideways? Is there enough juice? Do you have a strategy? All these other things. So the point is that there is a lack of understanding most of the time when it comes to people selling calls and doing covered call strategies, right? They just don't understand how they work. I get tons of comments all the time. Yeah, but what happens if the stock is over your strike price? Aren't you going to get assigned? Yeah, maybe, but it happens so rarely, it's like not even a thing for me. It's like less than 1% of the time do I get assigned, because I have a strategy, and you need a strategy too. The second reason that people struggle when they are doing covered calls is because they set unrealistic strike price. And so those unrealistic strike prices are dangerous. Why? Well, I look at, this is not like buying a stock low and selling a high. That's different. If you want that, go find out how to find really great stock pickers for penny stocks or whatever. We do good quality institutional level stocks, and we sell calls against them. But we are not trying to predict the stock. You might laugh at me every once in a while because I throw out the concept of Nostradamus. We're not trying to be Nostradamus with the stock market, right? We're not trying to do that with covered calls. We want a decent stock that has some decent volume, and then we employ our strategy against it for income. We're not trying to buy low and sell high, right? That's not what we're doing. And a lot of people think, well, MicroStrategy is going to keep going up forever, right? You might think the same thing about Tesla or Apple or Nvidia or whatever. And so you have this belief. And so what you do is you set your strike price so far out that you're forgetting about income. And so when you forget about income, which is the whole point of my program, then you don't make the income. You're just waiting for that hope. You're just back to being a Nostradamus, right? And so you're trying to predict the stock. And meantime, a lot of times the stock will go down while you're waiting for it to go up. And so you're going to sell your strike price so far out of the money because you don't want it to turn you upside down when it goes above your strike price that you don't make any money, right? And you have no protection on the way down. We talk about in the money, at the money, and out of the money in different types of markets, in different types of stocks. If you're just selling way out of the money because you think MicroStrategy is going to go to 1,000, you're probably going to get hammered more than the person that's like, wait a minute, this stock, my indicators are showing that it's in a downturn. I better be in the money to protect my account on the downside. And so we teach all that stuff, but not everybody puts it into plan because it's so hard to get out of that Nostradamian mindset where you think you can predict the price. You can't. I can't. I've been doing this for a lot of time, and I've probably looked at more than 1 million charts, and I still can't predict the price. I try to figure out probabilities and where I think the stock is going to go, but there's no way I can predict. Market volatility. Now, this is why we say it's the right stock in the right market because there are certain markets you don't want to be in. Like right now, as I sit here and record this, the market is red and it's very volatile, right? It's hard to predict. Now, volatility you may think is great for a covered call investor, and it does provide a little bit more juice because the implied volatility is higher. But the bottom line is that you don't want that volatility, because if you're one of those people, and I know a lot of them, they're glued to their screen, you're going to be just putting yourself through fits. And so that volatility, you want things to be kind of calm. You'd like things to go nice and steady up from lower left to upper right, rather than up and down and up and down and up and down. Okay? So that's a big one. Now, managing risk. Risk management is one of the most important things, and most people just don't give it the time it needs. And look, I fall into the same trap of not managing risk because I let my emotions start to take over, and I think that I'm right, and I'm going to try to predict the stock. It's a human thing, but you've got to manage your risk, right? And what that means is that you've got to have a target price and an exit strategy on every stock that you pick, even if you're doing covered calls. I'm really growing to respect what I call a circuit breaker, and I have my students, when they're building their trading plan, think about putting a circuit breaker into every investment, because sometimes if it goes down 30, 40, 50%, you're really going to wait a long time for that income to bail you out. So it's better to get out when you can and go to cash. Cash is a position, and come back in with your dry powder when the market is fertile. So that's number 4. Number 5 is chasing high premiums. And I call this chasing the juice. And I know so many students that just come into this and go, well, this stock has incredible juice. You can make 4% a week on this stock. Watch out for that. Those are the ones that are the ones that will wake up in the morning and they'll be down $30, and they'll surprise you, and they'll gap down, and you won't have a chance to repair the trade. And so if there's something that has a high premium, there's a reason it has the high premium, and so you have to respect that. So maybe make a smaller position or have a deeper in the money strategy, whatever the case is for you. Chasing those high premiums can lead to some disaster sometimes, especially if you just don't have a kind of circuit breaker involved in it. Another one, and this comes from the concept that people are asking me about, what happens if your stock gets, want to get assigned, like it's over your strike price, doesn't it get assigned? Well, first of all, think about it from the buyer's perspective, okay? The buyer is paying a premium. The buyer's cheap, right? Let's be honest. The buyer would have bought your stock, but your stock is too expensive, so the buyer would rather have more leverage and buy options, even though they're paying a premium for those options. And that premium will expire at some point. Well, that's our income, okay? So, but what happens if you get a stock that's trading ex-dividend, right? And that means it's trading without the dividend. You have to know what that date is, because right before that date, people are going to give you that stock. They're going to assign you that stock, and you're going to be short the stock, and then you're going to be required to pay them their dividend. The last thing I will say, the number 7 reason that most people struggle with covered calls is because they make emotional decisions. They get into a stock, they're all excited, and then it goes down, so they double down or triple down, or they buy more. They make emotional decisions. You know what I'm saying, right? You've said these things to yourself, because I know I have. It's it'll come back, or it's a great company. Whatever it is, you start to make emotional decisions and you don't heed your rules. You don't have a trading plan. And if you watch my channel, you know that the only thing that I really talk about all the time is having a trading plan and then executing that trading plan and sticking to that trading plan. Okay? Your trading plan can have a lot of the tools that we teach, but you've got to have a trading plan because it prevents those emotional decisions. I always say, when emotions go up, intelligence goes down, and vice versa. So you want to be an intelligent investor, and that means having the way to get fewer emotional decisions, and fewer emotional decisions comes from a trading plan with rules and proven strategies and things like that. So in any case, covered calls is the best system that I've seen, but you need a system, right? That's the key word there. Most people don't have a system. They buy a stock, they sell a call against it, and that's great until things go down like they are in this market right now. And then you're like, I wish I had a system, right? But have some kind of a system that you can follow, have a trading plan that you can follow, and try to use those 4 cornerstones. Buying the right stock, really critical. In the right market, also really critical, especially if you're in this market now. You know that it's not going up, and you know that you're feeling some pain if you're looking at your account value. At the right spot on the chart, like there's a spot on the chart, 2 or 3 of them, that have your best chances of appreciation. And there's a lot of spots on the chart, probably all the other ones, where you don't have that probability in your favor. And then you want to squeeze the juice at the right strike price. There are 7 reasons people struggle with covered calls. I hope you've learned from them and that you can avoid these things in your trading.
Hi, Mark Yagi here, wealth architect and author of this book on my covered call investing system called the Cash Flow Machine. Listen, what you just saw is just one part of creating reliable income of 2 to 4% a month from the stock market. But you know, if it were that easy, then everyone would do it, right? If you want to learn how I create investment income the right way, then you need to learn and have a system with rules and what-if strategies so that you can learn what I do when the market goes against me, what I do when the stock goes against me, how to adjust my trade so that it's always in a winning position, how much to risk, how to build a multi-million-dollar portfolio that creates income of $10,000, $20,000, or $30,000 a month in semi-passive income. And best of all, the whole cash flow machine system takes less than an hour a week to implement. Just go to cashflowmachine.io to learn more, or click this link for more videos, masterclasses, and free resources. See you there.
Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.